Is there a message in the market over these last couple of days that we need to pay attention to?
I think it's interesting because, last week the markets were so weak and everyone, I think, felt so despondent that this week was going to be just a replay of last week. And so I think that as the election is here today, people are settled, I think, into the fact that we will have a result. I think the market thinks we will have a result, in the next 24 hours. And I think just we all have fatigue from this election. And I think just having a decision is what the market is pricing in right now. And then after that decision, we'll go from there. Yeah. So I think the market's positive for clarity, at least the guise of clarity. It may not be clear. We'll see tomorrow what actually happens.
Yeah, unless the market, Josh, is getting ahead of itself, because if you go by our CNBC States of Play poll, only 1 in 5 think you're going to have an answer tonight on election night. The market seems to be acting over the last couple of days like we're going to know everything and go to bed knowing who the next president's going to be or Donald Trump's going to get a second term.
Yeah, I don't have any special insight in the polls. I do think that there's some overstating of the things that went on in 2016. And now people expect that to be the case this time because of the recency bias. I do think a lot of the holes in the way questions were asked and polls were taken have been closed. And so probably the polling we've seen this time will be more close to reality, although it's never going to be perfect. But I do think the market is beginning to price in Biden. And I think you can say that based on one very simple thing you can look at, which is the 10s and 2s. So we are now at 71 basis points in that spread. This is very important because we are at the highest level since we were in January of 2018. And if January 18 sounds meaningful to you or rings a bell, that was the onset of the trade war, which, by the way, has been a much bigger tax on the economy, on the consumer, on businesses, an invisible tax through the manufacturing sector into recession last year, inverted the yield curve. That was a way bigger problem than whatever you think Joe Biden may or may not do to the corporate tax rate. So I think the market is saying it's okay for that yield spread to widen. It does look like all the stimulus is going to lead to an economic recovery. And if we get a vaccine, an end to the trade war, that is good enough for economic expansion in 2021. I think that's why you're looking at the financials ripping. Regional banks up 3.5%, highest level since June. Take a look at Macy's, JW Nordstrom, a lot of the value stocks. All of those things happening in concert. The dollar weakening, very noteworthy. International stocks up 3%. Small cap value, IWN, N as in Nancy, priced in triple Qs. That's small cap value versus large cap tech. That's been bottoming for 6 months. That's now breaking out to the upside. So I think that is the message of the market. It could change, but that is the expectation being put into place in each of these very economically sensitive areas.
You really went through the reasons why I said at the top you had the best breadth in the market since April. Steph, you buy it? You buy what Josh is selling there?
Well, I think you have to think about long-term versus short-term, right? So long-term, according to Capital Group, who put out a great report a couple of weeks ago, it doesn't matter. Long-term, it doesn't matter who gets in, who wins. 18 of the last 19 presidential elections, if you put a hypothetical $10,000 investment into the market at the beginning of the election year, you would have gained value 10 years later. So no matter who won. So long-term, I mean, if you're a long-term investor, you kind of ignore this noise and this volatility. Short-term, it all depends on Congress and the mix of Congress. And I would agree with Josh in terms of the market is pricing in a blue wave, not only just a Biden win, a blue wave. Because if you look at the sectors that have been outperforming over the last month, it's infrastructure, it's clean energy, it's healthcare services, pharmaceuticals have lagged. So I totally agree that the market is pricing it in. We'll have to see whatever happens. I think the market would be the happiest if you had a Biden win in a mixed Congress, because as an investor, we like gridlock. We don't like a lot of surprises. But I think status quo is also probably rewarded by the market as well, because you do have a pro-business president. You have lower taxes, lower deregulation, or regulation rather, but you also are going to get a lower fiscal dollar amount. And so that's going to offset it a little bit. The blue wave, you get higher taxes, but you also get a higher fiscal amount. So there's a lot of different outcomes that you can kind of conjure up, if you will. I'm not trading my portfolio on the short term. I'm actually investing for the long term, and that's not changing in terms of cyclicals as well as secular technology.
So your vote, if you will, on which man is better for the stock market is it doesn't matter.
Doesn't matter. You have to look at Congress, because can they get anything done? Right? I mean, investors, we like gridlock, because then you get one or two things done, and then you can kind of you go back and focus on fundamentals. If you get status quo, we already know what we're going to get, right? We already have that playbook.
Hey,
Blue
Steph,
wave, I think you see the most
exception,
change. Yeah.
I think you're dead right on the markets preferring gridlock. I think the only couple of exceptions there, there's a really big one, which is stimulus. I think the market would say, okay, gridlock would be nice, but $3 trillion raining down on states, cities, people with less than $100,000 in income, people on food stamps, like that actually would be preferable to gridlock, and that's literally on the docket for February in a blue wave scenario. So I think that is an exception
Well, I would simply say
to the preference for gridlock.
No.